Welcome back to Finance Kida, your go-to channel for mastering finance concepts and acing interviews. Today we'll explore Ind AS 16, Property, Plant and Equipment, PPE, a fundamental topic for CA aspirants. If you're preparing for interviews or just looking to sharpen your understanding of the standard, you're in the right place. Before we start, check out the description for links to our other videos on accounting standards and finance topics. Don't forget to subscribe, share this video with your peers, and watch it a couple of times to solidify your concepts. Let's jump right into it. Starting with an important aspect, what is the scope and objective of Ind AS 16? The objective of Ind AS 16 is to establish principles for the recognition, measurement, and depreciation of property, plant, and equipment. Key points to highlight. It applies to tangible items used for production, supply, or administrative purposes. It excludes items like inventory and investment properties, which are covered under other standards. Moving forward, let's explore how an item of PPE is recognized. How do we determine whether to recognize an item as PPE? An item qualifies as PPE if 1. It is probable that future economic benefits will flow to the entity. 2. The cost can be reliably measured. For example, a company purchases a machine for 10 lakh rupees. The machine is classified as PPE if it is used in production, and its benefits can be reasonably estimated. When discussing this in interviews, make sure to contrast initial recognition with subsequent measurement for clarity. Now let's touch on another critical question. What is included in the initial cost of PPE? The cost of PPE comprises purchase price, net of discounts and rebates, directly attributable costs to bring the asset to its location and condition, restoration costs calculated as the present value of expected dismantling obligations based on Ind AS 37. Example, if a machine costs 10 lakh rupees, installation is 1 lakh rupees, and dismantling is estimated at 2 lakh rupees, discounted to 1.5 lakh rupees. The total initial cost will be 12.5 lakh rupees. In your interview, it's helpful to distinguish between capitalized costs like site preparation and costs expensed immediately like abnormal wastage. Let's move to another important area. How is depreciation handled under Ind AS 16? Depreciation systematically allocates the depreciable amount over the asset's useful life. The depreciable amount is the asset's cost or revalued amount minus its residual value. Common methods: 1. Straight line method. 2. Reducing balance method. 3. Units of production method. For instance, a machine costing 20 lakh rupees with a residual value of 2 lakh rupees and a useful life of 5 years will have depreciation per year using the straight line method: 20 lakh rupees, 2 lakh rupees, 5 equal sign 3.6 lakh rupees per year. Remember to emphasize in your answer that residual values and useful lives need to be reviewed annually. Next up, let's talk about the revaluation model. What is it and how does it work? The revaluation model allows PPE to be measured at fair value, less depreciation and impairment. Any increase in fair value is credited to OCI, other comprehensive income, as a revaluation surplus. Any decrease is charged to the profit and loss statement, except to the extent it offsets previous surpluses. Example, if a building valued at 50 lakh rupees is revalued to 60 lakh rupees, the 10 lakh rupees surplus is recorded in OCI. If the value later drops to 48 lakh rupees, 2 lakh rupees is reversed from OCI. 10 lakh rupees hits the profit and loss statement. When discussing this in interviews, highlight how accumulated depreciation is handled during revaluation. Now, let's address an interesting concept. What is component accounting? Why is it important? Component accounting involves recognizing and depreciating significant parts of PPE separately when they have different useful lives or consumption patterns. Example, for an aircraft, the engine costing 50 lakh rupees may be depreciated over 10 years. The body costing 1 crore rupees may be depreciated over 20 years. This approach ensures more accurate financial reporting. Use relatable industry examples like lifts in buildings or machinery parts in manufacturing during interviews. Moving ahead, how are restoration and dismantling costs treated under Ind AS 16? These costs are added to the asset's cost and recognized as a liability under Ind AS 37. Example, if dismantling a factory will cost 5 lakh rupees after 10 years and the discount rate is 8%, the present value would be 2.31 lakh rupees. In interviews, stress the unwinding of the liability as a finance cost over the asset's life. Lastly, let's touch on disclosures under Ind AS 16. Key disclosures include depreciation methods and useful lives, reconciliation of opening and closing balances of PPE, details of revaluations and any changes in fair value. Make sure to emphasize the importance of these disclosures for transparency and comparability in financial reporting. Conclusion. And that wraps up our session on Ind AS 16, Property, Plant and Equipment. I hope this video helps you build a clear understanding of the standard and boosts your confidence for interviews. Don't forget to check out our other videos, like, share, and subscribe to Finance Kida for more content that simplifies complex financial topics. Good luck with your interviews, and I'll see you in the next one.